Hey everyone, welcome back to another OctaFX webinar. Just doing a quick audio check and then we can get started. Hey everyone. Okay, audio seems to be good on my side. If there's any problem, do let me know in chat and we can try and figure it out. But welcome to another webinar, and tonight we are going to talk about what you need to know before opening your first order. My name is Vito and Henjoto, and we can just get this started. There's a lot to cover. There's some basic information stuff that we need to go through, and then we'll go through the website and then platforms. So by the end of the session you should be able to execute your first trade, and that's basically the whole goal of this session. Okay, just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of a general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products, thus carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. We are going to talk about leverage and margins later on. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay. If you do have any questions while we go through the presentation, just type it in the chat, and then we will go through that during the Q&A session at the end of this presentation. Okay, so here's what's we are going to talk about. This is the agenda. We are going to talk about the global markets and their surge in popularity, basics of trading, market terminology, understanding how to trade Forex and how to get started. That's, going to set up your demo practice account or your real account, and then we'll go through the platforms, how to basically set it up and then execute your first trade. Okay, so let's talk about the global markets here. Because when we discuss global markets, this includes foreign exchange, and that's probably why most of you are going to be here for. But not just foreign exchange, we have the global indices, which is the ASX 200, the US 30, JP 225 or the Nikkei 225. Then we've got the Hang Seng, we've got the German DAX, CAC 40, FTSE 100 in the UK, and then we also have commodities that you can actually trade. You can trade gold, silver, crude oils. We will also talk a little bit more about, well, we're not going to talk about future contracts, but it is part of the global markets. Treasury bonds, index futures. We are going to talk about the index futures later on. And there's a lot more to the global market. So with these products are often traded over the counter, while some can also be exchange traded. The one that we are going to be focusing on tonight are going to be OTC products. Most commonly, these instruments are traded through contract for differences, CFDs, and that's basically what OctaFX is offering. So in fact, OTC Forex trading are often mistaken for spot trading. OTC Forex trading that's often mistaken for spot trading is actually Forex CFDs. Forex CFDs and spot trading is actually pretty different, but we are going to focus on the CFD side of things. Okay, so let's talk a little bit more about what's been going on in recent years. So the past 2.5 years, following the pandemic, day trading the global markets are increasing in popularity. That is due to you got your flexibility of trading hours. Most instruments can be traded 24/5. Cryptocurrencies can be traded 24/7. Okay. Ability to exploit opportunities from both a rising and falling market. Typically, equity traders are not used to short selling the market. It can be done, but it's a little bit more complicated. What's really pulling a lot of people into CFD trading is actually the lower capital requirement for most instruments. This is through leverage, and we will talk about leverage later on. We got better liquidity compared to the equity or share markets, and that leads to a faster execution speed. So if you click buy and sell, you don't have to wait for some other traders to actually take on your orders. Your orders are pretty much filled in milliseconds. It's really quick. I'm gonna show it. I'm gonna show it later to you. Insider trading and market manipulation is also kept to a minimum, considering the scale of the market globally. We are talking about global markets. We're not talking about trading some specific company stocks. We are talking about currencies mostly in general, and it's really hard to do insider trading or manipulate the currency market because the scale is just so big. Also, the rise of cryptocurrency popularity leads to interest in tradings of cryptocurrencies, and CFD cryptos that OctaFX are offering are one of the easiest way into the door if you want to get started immediately in terms of trading. Okay, so let's talk about some of the markets. The first one that we want to talk about is Forex, which is short for foreign exchange. This is the largest and most liquid market in the world. Back in 2008, 2009, its estimated daily transaction amounts to about 1.9 to 2 trillion US dollar. Today, the estimated daily transaction amounts to more than 6 trillion USD. So it's grown exponentially. A lot of people are actually trading the FX market. There's a lot more people trading the FX market nowadays compared to what it was maybe 10, 15 years ago. Okay, this is more than 100 times the largest and most traded stock market in the world, which is the New York Stock Exchange. Foreign exchange market as a whole consists of physical and digital transactions without leverage through bank transfers, physical currency exchange, currency options, and Forex CFDs. Typically with Forex CFDs, you do have leverage there. What is referred to by most traders when it comes to Forex market are mainly the CFD based transactions. This is when we talk about, hey, do you trade Forex, or are you into trading Forex, or what do you know about trading Forex? Typically retail traders trade the Forex market through means of CFDs as a vehicle. So falls under the currency market, but different from money market, which consists of treasury bonds. So the currency money sounds very similar, but currency market and money market are really different. OctaFX offers most currency pairs that are commonly traded with leverage through CFDs. And what are the common currencies that are being traded? We'll talk more about that later on before we wrap up the information session. We do have the major currencies, minor currencies, currency crosses, and the exotic currencies. We are going to break that down. Okay, next market that we wanted to focus on are commodities market. So the commodity market refers to a market where primary or raw products are traded. There's several categories. Obviously, we've got the hard commodity, which is gold, silver, copper, iron ore, rubber, and then we've got the soft commodity, which is wheat, coffee, cocoa, cotton. Then soft commodity prices are usually seasonal and very highly affected by the weather. Hard commodities like metals are affected by manufacturing data, depending on if there's any demand for it. If the supply dries up, prices will typically go up. Demand goes up, prices again will typically go up. OctaFX offers US oil, UK oil, gold, silver, and I believe natural gas as well. XNG is also offered through CFDs to OctaFX clients. Okay, so we talk about the Forex market, we talk about the commodity market. Next up is the equity market, or specifically the equity index that we want to talk about. Equity index is a benchmark index that is the weighted average of the top stocks listed in it. The US 30 is the top 30. S&P 500 is the top 500 largest cap company that's in there. It gauges market performance across the stocks listed in it. Interestingly, while traders talk about trading the index itself cannot be traded. Okay, so when we watch CNBC or Bloomberg or whatever, and they talk about the futures market, they're referring it to the index. We saw the US 30 goes up, the S&P 500 goes up. That's just an index, and the only way to trade the index are through other means, such as CFDs. You can trade CFDs because you are trading the contracts for the changes in prices on the index itself. So it can be done through index futures. It can also be done through options, but mostly through CFDs, and that's probably the easiest way to go through trading equity index. Now, every country has its own index, and what is it called? Is it the Nifty 50 in India? They call it, but Singapore has the Straits Times Index. In Japan, there's a Nikkei. Then in Korea, there's Kospi. So every country basically has their own equity index, but not all of them are openly accessible. Index from emerging markets and China typically are not available to the general retail traders. Not a lot of providers offer this index to be freely traded. Okay, trading the index is generally easier for traders compared to trading individual shares, because you are tracking the general weighted average, right? I mean, if we take a look at Nasdaq 100 follows top 100 stock tech sectors, Apple could be having a good day, Amazon could be having a bad day, Google could be having a good day. If you trade individually, you need to do research for each individual company. You need to do research for Apple. You need to do research for Google. You need to do research for Amazon. But with the index, you basically just look at one chart, and typically just a general information in terms of fundamentals. How's the market sentiment? You typically are just looking at one index, which is a lot easier than having to look at each individual stock. So again, everyone's background is going to be different, but I'm going to assume most of you, maybe 80-90% of you here, are beginners, probably don't have a direct experience in trading individual stocks in the US. Okay, so OctaFX offer major indices such as the Dow Jones Industrial Average, or the Dow 30 or US 30, the Nasdaq 100, FTSE in the UK, ASX 200 in Australia, and Nikkei 225 or JP 225 in Japan. Okay, so let's talk let's talk a little bit more about the advantage of CFD instruments. What's really interesting about trading the CFD instruments, you're basically trading the futures market, right? Currency futures, commodity futures, equity indices. So you're talking about a 24-hour market for most instruments. So traders can choose their own trading hours, and this is what makes it popular. You could be working during the day, and then when you come back from work, maybe you want to set some time, maybe an hour or two to trade. Then you can trade at night. Maybe you have a night shift. You work in the evening. You can trade in the morning or in the afternoon. So it's completely up to you when you want to trade. So traders get to choose their own trading hours, and this is basically what makes this feel attractive, because you can choose your own hours. You're not confined into just a specific time for you to be trading. Unlike the traditional share market, you need to wait for the market to be open, and then it typically opens at 9 in the morning, closes off at 4, and then in between there's an hour break during lunch period. Those are things that you don't have to worry about, because with CFD markets, the market just keeps running. Okay. And the other advantage that we also talked about this earlier, unlike traditional share market, CFD traders can find opportunities in both rising and falling market. So let's say the equity market last month wasn't doing great, right? It fell pretty drastically last month. For those that hold U.S. equities, you just have to bear with it that the market is in a fall. But all you can do is just hold on to your positions, and just have to wait until the market turn around. But with CFDs, if you see the market falling down, then you can actually short the market. You can sell up top and then buy it back at the bottom. So you can actually sell high, buy low. You don't need to buy low and sell high, but obviously you can do both with CFD market. It's just easy to take advantage of a rising and a falling market. You can go short, you can go long, you can sell, you can buy, whatever you want. Is actually easy to execute, and we'll show it to you later on. And then there is leverage, and this allows for less capital requirement. Okay, I'll be honest with you, before the current retail CFD markets are in play, they've been around since 1996, but they didn't really develop until 1999, 2000. And back then, the cost was still expensive. You got to pay commission, you got to pay huge spreads. Right now, commissions are basically pretty much gone. Spreads are extremely low. It's very, very competitive. And, the capital requirement just becomes smaller and smaller. Right now, I think you can start with $100 or $100 to $300 and get started immediately. Back then, you kind of need to have about, I believe when I first started, you need to have about 10,000 minimum. Typically, brokers don't even want to entertain you unless you have 30,000, 50,000, but the numbers have dropped. Leverage is there, so take advantage of that. A lot more people can participate in the market without having to have huge capital on their side. Obviously, large capital, large equity does help a lot. We'll talk more about that during the leverage side of thing and the margins. Okay, so let's talk about Forex. This is not new. Most of you that came in and joined this webinar probably are new to Forex. So it's often misunderstood as a new financial instrument, a new hype, especially in the past 2.5 years. A lot of people got introduced to trading Forex, and people thought, this is something new. Forex is something new. Forex is actually the oldest form of financial market. It's been around, I believe fiat currency was used in 600 AD in China. So it's been around for a long time. Before currencies even exist, it actually originated from barter and trade. So bartering and trading, that's trading, and then it evolved into foreign exchange. But modern currency is commonly referred to as fiat currency. Okay. And the reason why I want to bring this out, why do I want to talk about fiat currency, is because when we talk about currency, a lot of new traders or people that just get to know the market, they thought cryptocurrency and currency are the same because they have currency at the end of it. They are completely two different asset classes, and that's why I need to clarify. Traditional currencies like the US dollar, the euro, the Canadian dollar, the Australian dollar, Indian rupees. There are fiat currencies. Okay, so this forex trading previously reserved for wealthy individuals, large organizations, and banks. That is due to the lack of leverage. We will talk about leverage later on, but basically you need to have a lot of capital to make your trade worthwhile. Okay, to make a significant gain that you can feel, you know what, I'm actually gaining something out of the market. You typically need to have a lot of capital to get started. Okay, so when the internet was publicly utilized in the mid-1990s, to be exact, it's actually 1994. Forex trading started in 1996. I used to work for one of the brokers that started this online trading stuff. So it really opens up, when there's internet, it opens up a floodgate to online trading and leverage trading. Forex right now is very accessible to the public, and everyone can trade. Everyone can trade doesn't mean that it's suitable for everyone. So let me just remind you about that. So today, you can actually apply for an account and start trading within the day. In fact, right now, if you go to the OctaFX website, you can actually go there and sign up for a demo account, download the platform, and we'll go through that later on in the session. But if you want to wait, we'll walk you through that. So it's actually pretty easy to get started right away. Okay, so before we go on, let's talk a little bit more about basic market terminology, or what I call as a jargon buster. So you actually know, the lingos in trading. So this section will help you in this presentation and also throughout your trading career. We will start with bid price, and that is the price you can sell to the dealer or your broker. So if you want to sell Euro USD, you'll be looking at the bid price. If you want to close your position, you'll be looking at the bid price. If you want to buy something, then it'll be the S price. It's actually the price broker sells to you. And then we also want to know what is liquidity when it comes to trading. When it comes to trading, liquidity means the ability or ease of buying or selling an instrument. An instrument would be a currency pair, for example, or a commodity like gold, for example. When I talk about long just now, that is buying a currency or buying an asset. All right, you can go long gold, for example. That means you are buying gold. Let's say you are going long the euro, then you are buying the Euro USD. We talk about the example of a falling market. I want to go short, right? If I say I want to go short, then I want to sell something, right? When we talk about the equity market falling, I could be shorting the US 30, I could be shorting the Nasdaq 100, for example. And then PIP, you are, not me. You're gonna hear this a lot. This is basically how you actually count your gains or losses. This is PIP. It stands for price in point. It's represented by the 4th decimal point or the 2nd decimal point in yen crosses. Okay, so for those thinking that you haven't done Forex, if you have traveled overseas or purchased an item online from other countries, you actually have taken part in the Forex market, and you actually understand the concept of trading currencies, because you need to know how much is $1 in other currencies, for example, in Japanese yen, or maybe in Canadian dollar or Australian dollar. So Forex, in a nutshell, it simply involves exchanging one currency for another currency. And if you have done so in the past in your life, then you have actually taken part in the forex market itself. So OctaFX as a broker is not that different from a currency exchange stall, for example, at the airport, or bank when it comes to forex, because you're just exchanging one currency to another. Okay. So, but before we go on, before I show you the fun part, let's talk a little bit about understanding FX quote, because we need to know what the FX quote is. So let's take a look at how a currency pair is actually formed. For example, we have the AUD. It will be quoted in two currencies. It's always going to be quoted in two currencies. It's AUD or Euro USD, Pound USD, Dollar Yen, Aussie Swiss, Aussie CAD. The choice is yours. But for this example, we are going to talk about Aussie USD, for example, and how to actually understand this quote. So the first currency at the beginning, that's what we call the base currency. The second currency that's quoted, that is called the counter currency. And then you'll get two different prices, right? The bid price and the ask price. At any given moment, and there's always going to be a bid and an ask. And they're not going to be the same number, because the difference between the two of them are what we call spreads. And that's basically what the brokerage takes in as their commission. Right, for example, the bid price here is 0.8937. That's you selling the Australian dollar to the dealer. The asking price is 0.8939. That is how much the broker is going to sell it to you for. Okay, so the difference at the end of it is basically the pip. Okay, so we got 0.8937 and then 0.8939. The difference here is 2 pips, right? We count the fourth decimal point. Now, if you are reading this bid and ask price, what is the number that you take to quote? It's always the more expensive one, which is typically the asking price. So 1 Australian dollar, if we read it, it will be 1 Australian dollar at 89 cents 39. Okay, so that's pretty simple, but very, very important, because you need to read your quotes correctly. Otherwise, it's going to be really, really complicated later on. Okay, so if the Aussie USD price is 0.8939, a 10 pip movement will change the price to 89.49. Yeah, so it makes sense. Taking a look at the last the fourth decimal point here. So when we talk about a movement of 100 pips, that's 1 cent. So if you watch the news at night and the newscasters say the US dollar fall by 1 cent or 2 cent, then you know how many pip that is. 1 cent is 100 pip, 2 cents is 200 pips, and so forth. Okay. So if there's a change of a plus 100 pip, then it will change price to 90.39 from 89.39. That's basically 1 cent. Okay. All right. Let's move on to leverage. Leverage, in a nutshell, it amplifies the potential gains and losses. It's a very useful tool to help traders lacking the capital to make significant gains in the market. We'll talk about that in the next slide. So this basically allows everyone access to the currency market. OctaFX currently offers a leverage of up to 500 to 1. Team Octa, if I'm wrong on this one, do correct me, but last I checked it was 500 to 1. But basically, for every dollar, if you take a 500 leverage, I mean, for every dollar you can actually control $500. So yeah, you can do the maths. If you have $100 leverage by 500, that's 5 5,000. No, yeah, that's was it 5,000? It is 5,000. Okay, so so that's basically how it works. It'll just leverage your position. So you can choose your leverage. Obviously, you can choose if you want to have a 1 to 200 leverage, 1 to 400, 1 to 500. It's completely up to you. So this is how it works. Let me give you an example with 400 to 1 leverage. To open a position size of 1 million, you will only need 2,500. Now remember back a few slides, I said, it used to be reserved for the wealthy, because if you trade unleveraged, you need to have $1 million to do this same trade as in this example here. But through wonders of leverage, you only need to have 2,500 to open the same position. That is 1 million, as if you are unleveraged. Okay. So we call this 2,500 margin required. This is going to be set aside from your capital. Therefore, to open a $1 million position, you will need a starting capital of more than 2,500, obviously, like 5,000, for example. Okay, because when you open that position, 2,500 it's gonna be taken out from your account. It's gonna be set aside because you open a leverage position. Okay, so leverage, while used correctly, which we're not gonna cover this here. We'll cover that during money management and risk management sessions in the future. If used correctly, leverage can help in lowering the minimum capital to get started. Okay, so the lower your capital, the higher the leverage is. That's going to work for you, because the higher the leverage, the smaller the margin requirement is going to be. But it's also a double-edged sword, because while the leverage amplifies the gains, it will also amplify the losses. Now, take the example from the previous slides. If we have a 1 million position, unleveraged, the return of 0.01% of that 1 million position is actually 11,363, and that is risking only 0.01%, right? The gain is also 0.01%. But if you only have a capital of 5,000, with leverage, with the same return, 11,363, that is 227.26%. So this is what I'm talking about. When we talk about an unleveraged market, if you have 1 million set aside, right, your gains are going to be 11,000, for example. Okay, it's only 0.01%. But if you have leverage, you start with 5,000, your gains at 11,363, that is more than 200%. Okay, you see the difference here? It makes it more meaningful, more worthwhile. Okay, but if you are wrong, the unleveraged, if you have it unleveraged without leverage, the loss, if you lose that 11,000, if it goes against you, the loss will be 0.01%. But with leverage, the loss will be more than double the 5,000 starting capital. Okay, the loss will be 11,000. Okay, but because of the margin requirement and the margin call, typically you don't go all the way to double, losing double your capital, because you got a margin call. You'll get a margin call and the position get cuts off when you don't have enough capital to maintain that position. Okay, so in Forex, you could, but you don't lose. Normally, you don't lose more than your initial investment due to margin call and margin requirement, unless there's a huge slippage in the market. Then yes, there's always that potential there. Okay, so here's a quick leverage and margin required table if you want to know. So if you have a leverage of 100 to 1 to open a $10,000 position size, or what we call a mini lot, then the required margin is $100. If your leverage is 200 to 1, then it's $50. 300 to 1, then it's $33. If you have 400 to 1, then it's $25 and so forth. I'll show you the calculator later on, but you can play around with it on the website as well. Okay, so we've been talking about margin calls. Basically, when your available margin hits 25%, you will receive a margin call warning. A stop out will be triggered if the margin level goes below 15%. There are several ways to avoid margin calls. Number one is obviously plan your trade, manage your risks before entering a trade, reduce your position size, exit some positions to free up some margin. Okay, so you need to refer to the required margin, or you can actually deposit more funds to maintain your margin level and keep your position running. So your margin level is actually equity divided by margin times 100. Okay, so that's the technical part. How about, how do we know when it's time to buy or when it's time to sell? So basically, while understanding the financial market will obviously help, everyone can get started with limited knowledge. There are multiple ways to identify opportunities in the market. Number one, this is what I use every day. A lot of people use this every day. A lot of beginners are going to be using this every day. It's basically technical analysis. It's basically looking at price movement and relying on past information to identify future movement in the market. Allows for more accurate entries and exits. Minimal knowledge of financial market required. You don't need to have a financial degree or take Econ 101, for example, to get started in technical analysis. You can learn technical analysis quite fast, quite easily. And then we also have the fundamental analysis. This is looking at economic data and political views of different countries, which I'll show you an example after this. This is also a reliable view of the bigger picture or market directions. Okay, so let's talk about the current market situation, for example. So I'm going to show you an example of how to digest global information. So we got the war in Ukraine and Russia. So Russia is at war with Ukraine. Global leaders place economic embargoes on Russia, but Russia is also a major exporter of energy, right? So we speculate that if the war continues, oil prices will go up because of supply disruptions. XTI, US oil, and XBR, UK oil, are quoted against the US dollar. So we will do this. We will buy XTI USD or XBR USD because we expect oil prices to go up. Okay, in another recent scenario, we have the global interest rate hike that's going on right now every single month. We've got the US being very, very aggressive in hiking interest rate due to the high inflation there. Eurozone, they do have high inflation as well, but not as aggressive in hiking interest rate. We've got the Bank of Japan not even considering hiking interest rates soon. So how do we take this information? We speculate that if the inflation number in the US continues to go up, the FOMC or the Fed or the US Central Bank will hike aggressively. ECB and Bank of Japan do not hike aggressively due to economic reasons. There's a lot to dig in, but I'm just doing this as an example. So what we do in this scenario is that we can buy the dollar yen because we expect the dollar to be valued higher than the Japanese yen, and we can sell the euro USD because we expect the USD to be valued higher than the euro. Remember the base currency and the counter currency. We are buying US dollar, we're selling the euro because they are the base currencies. Okay, so digesting information, it's pretty logical. It uses a lot of common sense. I'm just saying this because a lot of people that jump into trading don't use a lot of common sense, so don't be like those people. Okay, so what to look at, right? Another reason why share traders are actually embracing this CFD market is actually due to its simplicity. In share market, there are thousands of shares to choose from, confusing new traders and investors on which share to buy, how to build your portfolio. There's just so many choices, so many research to dig into. But in the CFD markets, there are instruments that dominate, meaning they're actively traded daily across the globe. Global indices being an average of shares. This also allows traders to focus on the indices instead of the individual shares, like the example I gave out earlier. In the Forex market, there are currencies that dominate, allowing traders to focus on these economies. Okay, so we are nearly at the end of this information session. So here are some, this actually are the major pairs in Forex. So first we've got the euro dollar, euro versus US dollar, the euro USD. We got the Great British Pound versus the US dollar, or Pound USD, also called cable or sterling. Australian dollar versus the US dollar, Aussie USD or the Aussie. The US dollar versus the Japanese yen, or dollar Japanese yen, or simply just yen. US dollar versus Swiss franc, that's the Swissy. The US dollar versus Canadian dollar, the loonie, although not a lot of people actually use the term loonie nowadays. New Zealand dollar versus the US dollar, also called the Kiwi. Okay. Minor currency pairs are usually currency crosses. These are currency pairs that exclude the US dollar. Example of this are the euro pound sterling, the euro Japanese yen, the sterling Japanese yen, the Aussie Japanese yen, the euro AUD, and Swiss Japanese yen. Exotic currencies are currencies that are usually associated with developing countries, such as the US dollar Indonesian rupiah, the US dollar Turkish lira, the Thai baht, Malaysian ringgit, Filipino pesos, Indian rupees, Brazilian real, to name a few. Okay, so the major currencies are more commonly traded, leading to higher liquidity and non-exaggerated volatility in the market. So they are typically more stable. Because of this, they usually have a lower spread or lower cost of entry or trade. Cross currencies are usually not US dollar based, as such has a different pip valuation than normal US dollar denomination. Because they are not as commonly traded like as majors, they have a higher spread, with some lacking the volatility like the euro pound, and some with higher volatility like the sterling yen. Exotic currencies are not commonly traded, lacking liquidity, causing them to have a higher spread. In fact, there's not much exotic currencies that is actually being offered actually. So movement on this pair is actually exaggerated, and some pairs are pegged or on a controlled float by the government. These pairs are usually harder to analyze, and predicting price movement and range carries a higher risk than major or currency crosses. Okay, so let me just quickly pause here before we go on to the more practical side on how to open a practice account, navigating the MT4, MT5 platform, executing your first trade. Let me just go through the chat and see if there are questions there. The NFMe number just came up, 528. I don't have my terminal on. 528. Okay, let's move on. So here's the OctaFX website. Okay, basically when you go into the website, you can go on to the FX trading. Okay, you want to choose the account types or the demo account if you want to, but basically what you need to do is actually log in and create an account with OctaFX. That way you can actually set up your demo account in there. For this one, you want to download, you can use MetaTrader 5 or MetaTrader 4. You got the web platform. If you are a Mac user, I think web platform is your choice. You can download the application to desktop or Windows. You can also have it on Android and iOS. Okay, so when we click on FX Trading, when you go up here, you can actually start creating your account. But before I go on to that, I want to show you what's actually here on the website. That's actually really information to help you get started. It's the analysis and education section. Okay, you can click on market information. All right, it'll tell you the NFP number just came out. Okay, so we are going to go on to the economic calendar. Today, these are the fundamental data that came out. The NFP number came out at, it's not updated yet. I don't think is the NFP number out? It should be out. Okay, anyway, if you click on, if you already set up an account, you can go to the personal area. Okay, there's your dashboard here. Okay, and I can click on open a new account, for example, to start. Okay, this is not working for me. Okay, but it will be in the personal area where you actually set up your trading account. But once you have your trading account and you downloaded the MetaTrader, we can go straight to the platform and go through the MetaTrader platform. It will look like this. Okay, this is actually very interesting. I think we just had a major NFP number. Is someone in the audience? This is sidestepping a little bit, but I'm just curious. Is the NFP number 500 really 500? Is there any revision on the last month's number? Okay, but this is your trading area. Okay, so these are your currency selection. If you want to add more, you can click on symbols. And then you can add more currency pairs if you want to, Forex Extended. Or if you want to add Euro AUD, for example, you can double click Euro AUD. You want to add Euro New Zealand, you can double click that. Euro CAD, you can double click that. So we already have that. Next up, I want to open up a chart on Pound USD. I can right click and then I'll go to a chart window. This is looking like a very, very good opportunity to short the US dollar. Sorry, it's short the pound, and I just opened a Pound USD short. Okay, and I think I would like to short the Euro USD as well, but there's a different method that you can do that. You can right click, you can activate one click trading. Here you can set up the lot size. One is a standard lot size. The market is falling really quickly, so let's click on sell. First time you want to do that, you will have to accept the disclaimer, the terms and conditions. If you've done so, you can click OK. And in the future, for example, I want to trade the dollar yen. All you need to do is just click it once, and the position gets open. Okay, the Euro USD, again, if you want to change the lot size, let's say you want to trade a mini lot, it'll be 0.1, right? This is a mini lot. You can just click on sell, and those are the running positions, and that's how quick we can execute a trade. Now the next thing is, if I don't like how the market is doing, for example, I want to close out on the Euro USD, I can right click and click on close position if I want to, but there's a quicker way. There's an X there. All I need to do is just click on X and it will actually close the position. Okay, so that's opening up a trade really quickly. Also, if you want to change the layout on the MetaTrader 4, you can do so by right clicking and then go to properties, right? And maybe green on black is too much. I prefer color on white, right? I can change that there. Okay, so there's a lot of options that you can do. You can obviously zoom out or zoom in on the chart, and you can shift it if you want to. So I'm really paying close attention to the current run. Should be a quick pull up there because we do have support area coming in for the Euro USD right around 1.0150. For those that were asking about the NFP, I'm sidestepping right now because we just so happen to have the NFP right now. Okay, so if you have a running position, for example, this is on the dollar Japanese yen, right? We have a running position here on the dollar Japanese yen. When you open a trade, there's going to be a line. That's basically your trade. Since I'm buying the dollar Japanese yen, I want to take my profit up here. I like 136. All I need to do is just drag from the green line where I open to actually set my target level. And if I want to set my stop loss, all I need to do is just drag it down to set my stop loss there. Okay, and you can see on the window here, my stop loss is actually there, and my take profit is also there. I can change that manually as well. So if I want to change my stop loss to 132, I can do so, and if I want to change my take profit level to 137, I can do so, and I can modify the trade and it should automatically change it for you. Okay, so it's pretty easy, right, to actually place your trade in MetaTrader 4 and 5. Super easy to adjust your stop losses as well as your target level. Right now it's going up, and I think I want to have a small stop loss, so I can just adjust it there. So I can freely adjust my stop loss just by dragging on the chart. Okay, so that's it. That's how you place a trade from setting up. I do apologize. I have an issue with loading the OctaFX website. It's on my side, but opening up an account, there's a link in the description of this presentation right now that says start trading. So you can actually click on that, the start trading. Okay, and it should open up a link to, it should open up the page to the it should open up the page to the registration to set up a practice account if you want to start your practice account, or you can also register for a real account there. Okay, so very easy, very simple. Right, with my pound USD, I haven't adjusted the stop loss and take profit, so I think I want to adjust it right now. I want to have my profit target at 1.1975, for example, and I want to have my stop loss just slightly higher, and that's it, all done. Okay. Right, so any Q&A that you have, this is the time to ask, and then we'll answer the Q&A session. For this session, do keep in mind I will answer anything related to the presentation. I'm not going to be answering stuff about what's going on with the market, especially with the NFP numbers right now in this session, okay? When we will be doing Ichimoku, we will be doing Ichimoku. It's already planned out. I'm just awaiting confirmation on when we start the educational session on Wednesdays. We are going to be doing more educational sessions in English on Wednesday. I'm just waiting for that to start, but Ichimoku, it's scheduled to be the 4th one. So if we start doing the educational webinars in the next 2 weeks, then we are looking at around September for Ichimoku. Okay, explain PIP. Very good question. So let's take a look at this one here. So we got 134.79, 134.80. That's the PIP is actually not the small number here, but it's actually this number before that. Okay, so for example, on this one, I'm trading 0.01. That's a mini lot. Okay, so for every pip, is that mini lot? Yeah, so every pip that moves, my gain is actually $1. So for this one, a standard lot, for every pip, it's actually $10. So we're not even a pip right now. Okay, but pip is actually priced in points. And that's basically on the dollar Japanese yen is actually the second decimal point. On other currencies like the pound USD or the euro USD, it's actually the 4th decimal point. Okay, the smaller one up there is also, it's called a fractional pip. So for every 10 fractional pip, it's actually 1 pip. So yeah, so 35, 36, the spread is 1 pip. If 33 drops to 30, then it drops 3 pips, yeah? So you can actually look at the difference between the bid and ask. The bid and ask in MT4 and MT5 is actually quoted in 5 decimal points. You look at the 4th decimal point, not the 5th decimal point. NFP 528 previous revised to 398, which is up to 300,000. Consensus 250,000, forecast 290. Unemployment rate was down for the US. Okay, a little sidestep there. Very, very tricky. Okay, any other questions regarding, you know, the whole information with the global market, how to get started easily? So yeah, I mean, right now, I want to keep these 2 positions running. No reason for me to close it right now. So I'll keep that running, but once I think I'm happy with it, I'll probably close it out. But it's really going really quickly here. The Aussie USD should be in the free fall as well. Let me just load it up. By the way, we can have template if you want. I already loaded a template. That's a very nice free fall. So for those that attended the session on Wednesday, you guys should be really happy today. Anyway, let's do another quick trade here. Let's do a stop loss here. I believe we talk about targeting 67.50 for the Aussie USD, so I will leave that there. For a beginner, how do you determine when to buy or sell? So this is a very good example. We just had the US NFP numbers comes out, right? The US NFP number was expected to come in lower this month compared to last month, for example, right? It was expected to come in at 250,000, but the gain was actually double. It was 528,000. Yeah, from the data I got here. So because the US employment numbers was really good, the unemployment numbers also fall down from 3.6% to 3.5%. We would assume that the US dollar is actually going to be stronger. The employment market is really strong. The forecast was for 250,000 gain. We saw 528,000 gain. So that's definitely a big plus for the US dollar. So what we see in the market here is that there's a quick reaction going on in the market, that there's a quick drop in the market, really quick drop. If I go into the 15 minutes time frame, you'll see it really clearly. The 5 minutes time frame even, that the majority of the drop happens in 5 minutes time frames. Okay, it's 5 minutes period. So as a beginner, how do you determine when to buy or sell? Obviously, I'm talking a lot of jargon right now. I'm talking a lot about fundamentals right now, right? For those that attended the webinar session on Wednesday, you completely understand what I'm talking about. But for those that never join in, jump into our educational webinars, okay? Jump into our live trading sessions. There you can actually pick up what we look at in the market. But basically, there's two categories that you can look into. You can either focus on the technical analysis side to figure out the price action movement. Like, for example, the reason why there's a quick drop off from this one, it can be attributed to more of a range breakout. So once price break below that, that will trigger further selling in the market. So a lot of people actually jump in short here, and that drives the market even further. Okay, but there are tools out there. There's so many different indicators that you can use. There's so many different technical analysis strategies that you can use. You can also find out more about fundamentals, but typically I do update fundamentals on my Telegram channel. That's part of OctaFX offering as well. I do run a Telegram channel. I post in English as well. And then we also have several live trading sessions. My session is every Wednesday for the English session. Okay, but throughout the week there's going to be a lot of other speakers. There are a lot of other educational contents as well. So if you're a beginner, absorb as much information as you can. Just make sure you understand the workings of the market. Tonight's presentation, if you missed it out, I did talk a little bit about leverage and margin. Maybe you can review this session again and go from there. But I gave out a few examples as well. Okay. Lot size. Let's talk about lot size. Let me see if I can actually type it here. Lot size, when we talk about one standard lot, that is actually equals to trading 100,000. Okay. One mini lot or 0.1. It's equals to trading 10,000. Okay, and the next one, it's micro lot. That is 0.01, and that is equals to opening a $1,000 position. Okay, for this one, every 1 pip, it's equals to $10. For a mini lot, every 1 pip it's equal to $1. So this is typically most beginners are going to be at $1 range. For micro lot, every 1 pip it's equals to 10 cents. Okay, so it's very easy. 10 micro lot, it's 1 mini lot. 10 mini lot, it's 1 standard lot. Okay, so super easy to get it. Okay, so I hope this information session has been helpful. Are there any further questions for tonight's session? No? Okay, so if there are no further questions, thank you for taking time out on a Friday and spending the time to join this session. Hopefully this has been a very useful information session for you, and I'll look to see you in future webinars. And if you're joining in to OctaFX, welcome and good luck with your trading journey. Thank you all, and I'll see you soon.